Hey everyone, Sean Maloney, Digital Business Master, another DBM Strategy Call, mid-February 2025. Very, very interesting. We're doing these weekly at the moment because there is such a lot going on in global politics and macroeconomics, and it's all coming towards us who are determined to build out our digital business system blueprints. So digital business is a very special way for everybody on the planet with connections to the internet to be able to interface with each other through the web and also through blockchain technology, so that as you get into a position of ownership in asset form and leverage through putting your assets to work, then you're able to interface with millions and millions of people all over the world, which has a net beneficial effect to your equity value and your ability to cash flow. So think about that. Very, very profound indeed. Takes some doing because it's obviously never been done before. It's a new thing. It's a lot of people are still wrapping their arms around it. A lot of people want the result, but they don't have what it takes to move through the process. So part of the reason we set the academy up is to support that, And you'll see it manifesting in all sorts of different ways in the projects that you've chosen to participate in. All right. Our job is to keep people above the canopy, keep things very, very high level, so you can keep up every week with why you're doing what you're doing, because what you're doing is not easy. It really isn't. So in that regard, we're not here to give any advice. We get involved with lots and lots of different financial things, and obviously that's what we want to do. We want to become financially empowered. The tool of money provides people with life opportunity in any way you wish to use it. So you need the tool. It's not about the money. It's about having the money to be able to do what you want and have some element of sovereignty and freedom. That is ultimately what people are looking for. So our job is not to give you any advice on that regard. Our job is to help you to always seek financial education, because it's on that education and on those skills and on that mindset that you're going to be able to activate and take advantage of some of these things we're going to talk about now. Now, how do we do that? Well, we push that awareness across different means of real life use. So we focus on what we can affect. And that will always be the same thing, which is why we endorse being diversified, especially at this stage, less than 15 years in to this particular technology. It's best to be diversified. You don't need to go across all these 14 different platforms that we've chosen to identify at DBM. You can just choose one or two of them. But that's for you to decide. And that's where you've got the skills and the mindset stuff coming in to make a decision on where you want to start. If you've already started and that's not quite worked out, or things aren't working the way you wanted, or things go up and down, which will happen, just accept that. That's just the nature of business. Then think about where you're going to reallocate. Think about where you're going to put yourself next. What's working best? And with the 14 different industries we work in, as many people in the DBM Academy now understand, you are constantly looking at where to focus next. And that's a privilege. That's a real privilege. The only way you fail is to stop. If you keep moving and seeking the support to help you to keep moving, which is what the professional people do, the successful people do, then you're going to be moving towards your goal. If you don't do that and you get emotional, or you decide to kick back against things, or create, aspersions and everything else, then you're not going to succeed. You're just going to keep going back to square one again and waiting for something to turn up and hoping something will happen. You've got to take responsibility and keep it there. And it's best done if you're working together, obviously. So we allocate everything I'm going to talk about onto different mechanisms and platforms to the best of our ability and work with them and keep working with them. That's all well and good, but how is that best served if you're looking to either get started, which you may be doing, or you may be already established, but maybe things haven't worked out quite the way you wanted, or you've identified what we call skills gaps or mindset gaps in yourself, which is a big, big part of the reason a lot of people don't get all the way across the prairies and across to the West Coast, because they realize on that journey, they just haven't got what it takes. And that's okay. It's okay. Everybody's human, but the best thing is to identify what you need and then go and seek the resources, the coaching, the skills, and the help to get what you need. And that's really where the success is, actually. It's in that. It's in self-reflection and looking at where you can improve and not just keep kicking out against others that are trying to pioneer across this horizon. Yeah. None of us are perfect. None of us know the answers fully. What we've got to do is find our way across. And there's some people further forward in that process, the scouting people, the people that go across first and put themselves into highest risk and put themselves into things that are still being developed and understood, and then we'll start to build the road, and then the wagons come up behind. Yeah, if you're in the wagons, it's okay. Be in the wagons. Be in the wagons. But those up here at the front, those creating the biggest opportunities for themselves, getting somewhere first, the income subscribers, they'll be getting more and more momentum, more and more traction compared to somebody coming in here who's still sat on the wagon at the back of the trail. And that's okay. Be where you are. There's nothing stopping you coming further up the trail at all. And you can accelerate that process by getting the skills and the mindset. Hence, we spend a lot of time now in the systems end of this particular trail, particularly in the DBM hub, where you're going to get access to 24/5 interface with professional people who are way, way in front of this trail, the coaches. So think about where you're at on this, think about what you want to achieve this year, and put yourself in the right place to accelerate the process. In other words, you invest in yourself before anything else. All right, so that's just an indication of how everything I'm going to talk about for the next 10 minutes all connects in terms of what you can do to structure yourself. If what I'm saying next resonates and you understand it as something that may be worth pursuing, you want to start the process of going across on this journey, or you're on this journey, but you need to maybe think about what you're going to do a bit more constructively than what you've maybe done in the past few years, then the structure I've just described is how you do that with people who've got what you want and can prove it. In terms of the big overview, as ever, this goes out onto YouTube these days and other channels, so lots and lots of people could be listening to this for the first time. If what I've been saying so far gives you a sense of, okay, this is interesting, how do I instigate a digital business system? How can I take advantage of global geopolitics and macroeconomics? How do I get on the front foot? How do I front run what's going on as governments and banks adopt digital technologies? How can I get in front of that and take advantage of it as an asset owner in that maneuver? Well, the first thing you need to do is to understand that once you, and it starts with you, fix the money, then you're able to help fix the world. You know, if you've been around in this life for a long time, you'll recognize that every 10 years, all the sound bites come through and something's happening and it never moves forward. It never gets ahead, or certainly you never get ahead in that, because there's so many things happening in the fiat currency system that make it very difficult for the average person to get ahead. That's because you're focused on currency. And what you need to be doing is to shift that focus to money. And if you don't understand the difference between currency and money, then you're not going to understand how to fix the money in your own household, let alone being frustrated for the next few decades on why other people aren't fixing the money for you. Will they ever fix the money? Well, let's find out. Let's find out. What are we looking at right now? Which is a revelation when you've been involved with this industry as long as DBM have, well over 10 years now, that we realized there's a difference between currency and money, and we've applied things to our businesses to make sure that we're now front running what is now happening on global politics and macroeconomic levels. Think about that. Yeah, not a straight line. There's all sorts of problems to deal with. Just take a cursory look at the legacy media to understand the problems we're dealing with. But it's satisfying to be constantly ahead of that because you realize it is what it is. You realize you can see through it, ignorance or complicity from governments. If you understand both are the same in terms of problems, then you get less frustrated with the moving of deck chairs on the Titanic, and you start to think about how you can create your own lifeboat. That's what this is really all about. So get into the currency or money section in the getting started section and watch the 10 episode documentary, Hidden Secrets of Money, just to get yourself rolling. Very briefly, that all boils down in the end to understanding one very profound thing. You don't carry on unless you wish to, but it wouldn't be suggested that you should carry on earning income in fiat terms, currency, and then using that to attempt to keep ahead in life, whatever that means to you. Yeah. So everyone has a different life expectation, of course, but everybody has to use liabilities. Why wouldn't we do? We want to live and we want to make sure we're warm, safe, and secure. So that means having liabilities in our lives. Yeah. Doesn't necessarily mean a fancy sports car, that's for sure. But it means we have to fund life. But notice the word fund life, not buying. Big difference. What's the difference? Well, you're buying liabilities with your energy in the form of that energy being converted to currency and hoping that currency comes in with enough volume and maintains enough purchasing power, both of which don't happen and haven't happened since 1971. We hope enough of that comes in for us to buy liabilities as we go through life. Do you find yourself on a treadmill? Do you find yourself treading water? Do you find yourself going into loans and back again? Bad debt? Maybe. So the way to think of it is same energy, same blood, sweat, and tears goes into you converting what you need to fund, but you put a step in the middle, which means that you're allocating the currency into money and you leverage that money to create cash flow. And it's the cash flow that then funds the liabilities. Yeah, you don't buy liabilities, you fund liabilities. So it's a very, very important thing to understand. If that sounds strange and it's the first time you've heard it, then it's okay. You're not taught this bottom section in school or by your parents or by bosses or by banks or by governments. Why would they? Because the way that society works in neo-capitalism is for velocity of currency to be in place. But if the governments and the big bosses and the big banks can't manage that properly, and that's absolutely the case, how are people expected to go and manage it themselves? Well, you've got to make the break and you've got to maneuver yourself. And that's what this slide is trying to explain. So what does that look like practically? Well, it's all about equity and yield. If currency keeps being printed, which has been happening like clockwork every few years since 1971, that's the mismanagement aspect of bosses, banks, and governments, in my opinion, not seeing the problem for what it is. They're just looking to manipulate the system for how it was presented to them, generation after generation after generation. If they're going to keep continuing to print currency, what do you think happens to the purchasing power of that currency? Must it reduce? Does it take more currency to buy less goods? And conversely, what must happen to asset prices if they continue to print currency as their solution to keeping society liquid? Could it be that asset prices must increase? Well, obviously, yes. Stock prices, property prices, gold prices, Bitcoin prices, whatever you want to mention, all increase because it takes more currency to accrue the same thing. But what if you could then translate that even further to a point whereby you're in ownership, and dollar cost averaging is what we call it, you're slowly building up an ownership of an asset that is obviously going to go up in price, but it's quid pro quo. If the price goes up of an asset, simply because the currency is being printed that's creating that phenomenon, and you sell the asset, then you're no further forward than you were because to fund your liabilities is going to be more expensive anyway. So how do we accelerate and get ahead and front run Well, we do that by diverting a lot of our currency, our energy of earnings into asset classes that are increasingly scarce. So, in other words, it's not just the currency production that's falsely providing an illusion of more valuable assets. It's also the fact that there's fewer and fewer of those assets to be able to get hold of that also pushes the price up. Yeah, demand over supply. That's really where you want to be. And we've done that over many, many years with gold and Bitcoin. Yeah, arguably land as well. They're not printing any more land. But in terms of how we can interconnect with each other, we particularly focus on Bitcoin. And that is manifest in the price of Bitcoin, as you'll see if you look at any chart of Bitcoin over the past decade. That's equity. Okay, so understand one of the variables that drives the price, the value of Bitcoin, but understand the main thing that drives it along. And we'll touch more on that in a minute in terms of the scarcity of that asset now that the governments and the institutions are involved, just like they have been with gold over the past 5,000 years. But it doesn't stop with equity, of course. You can't run a business just off a balance sheet. You have to deploy some of the asset side of the balance sheet into cash flow, a profit and loss account, cost of doing business, and you've got the income that you create from however you've set up your business. And that can come from all sorts of different places. I'm providing value right now that's creating an income. Yeah, we're providing content onto the internet that's hopefully of use to people who can then take that information and convert it into education ready for application. So that's one way of earning, right? Solve other people's problems, provide value to the world, you'll always make income. But what if you could convert some of your digital equity into digital yield by providing liquidity to limitless companies, endless amounts of companies? You've just got to find. You saw 14 industries we were talking about earlier. Within each of those sectors are lots and lots of companies that are looking for liquidity. What would it be for us to identify the best we can find at any one time that provides us with a yield because we've allocated a part of our equity into their business? And for that, they provide us a return. And what would it be if, as you see here in these, if you'll see here in this particular slide here, in the green sections, these are highlighted specifically in the trading markets, the AI markets, and the OTC markets. These are yields per month. Now, it's obviously high risk because you're dealing with high yield. That's what you would expect, right? Hence, we diversify, and hence we're constantly reallocating to make sure that we mitigate risk. And we de-risk cash by making sure that we don't just deploy cash straight in the form of USDT, for example, straight from currency, straight to USDT, straight into yield. No, we don't do that. We de-risk by making sure that we leverage equity from our balance sheet and we borrow against ourselves in order to deploy protected Bitcoin in the form of cash into yield. Think about that. And we also do exactly the same in the altcoin industry. Well, this time you're not just dealing with either equity or yield, you're dealing with equity and yield. Once you understand how that works, it's by far the most powerful place to be, but it's also the highest risk and the most difficult, and the bit where the vast majority of people find it too difficult to hang on. We've got a project in our midst right now, which is now the second most valuable digital asset on the planet after Bitcoin. Do you think it was always that way? 4 years ago, when we started the process with that particular altcoin project, did we think it would be roses and sweetness forever and everything would be a perfect straight line? Or did we anticipate challenges? And have we worked through those challenges? Are we now working through the other side of those challenges? until the next set of challenges. But in all that time, do you think we've leveraged equity to give us now access to higher yields? And do you think we're staying there? Or do you think we're coming back to safer platforms through equity and Bitcoin especially to repeat the process I've just described? What do you think we're doing? And does that sound difficult and challenging and confusing and high level and sophisticated? Okay, maybe. But that's what the academy's for. So go back to where you think you should be. Everybody wants to be up here on the right-hand side. Everybody wants a balance sheet working for them 24/7 so they don't have to. But have you set off on the journey in the right way to get the mindset and the skills in place to put the systems down that I've just described in order for that to be the case over the next 3 or 4 years of your life? That's a question you need to ask yourself. On a more detailed level, and again, I pay attention to the pioneering spirit that's top of the agenda this week through Robin, one of the DBM coaches. Go to the blog section of DBM and have a look at that blog, what it is to be a pioneer. Everything I've been speaking about for the past 15 minutes is pioneering. No question about it. We may be 10, 15 years into the process, and it may have become a lot easier, literally in the past couple of years. But we're still pioneering. We're nowhere near to California yet. We've still got to get over those Rockies. But as more and more and more people are setting up on the trail, an ability for us to bring more and more people across, because more and more people are finding comfort and safety and ease, which is what the masses want, then you'll find more and more and more momentum pushing the pioneers across to the Pacific Ocean. That's where we are. And this is how we judge the weather. We look at the challenges of what's coming and we try and make sure that we're taking the right path through the Rockies because we understand the tailwinds that are there at any given time. And it's almost at the moment that we've just found a huge pass, a low-level pass has just appeared in the Rockies. Just a few months ago even, it was, we're going to have to go right the way up that pass. We're going to have to start walking. We're going to have to leave the wagons behind. But no, it's now appeared for us that we've found a route because the people who've been in front of us have shown us where it's headed. And those people have even shown governments and presidents and bosses and banks and, big industry pioneers what it takes to be able to leverage sound money, the biggest globally accessible asset on the planet, and start to convert that into cash flows. That is now starting to happen on an industrial scale, which means as us as individuals with our one little wagon are able to follow through that pass. We're able to see the horizon much more clearly than we've ever been able to see it. And we've got thousands of people behind us still. Some have given up on the prairies. Some are kicking and screaming that this hasn't happened, that's not happened. But they're starting to wake up and sit up and they're starting to get on the wagons way, way, way behind. Say, oh yeah, I see it now. Let's go, let's go. Fantastic. So once you've got these tailwinds behind you and the complexity of these things are profound, and there's no guarantees, there's always challenges, but you learn how to constantly build that balance sheet critical mass to turn that into something that you want, which is reliable income at a higher rate of inflation. That's purchasing power. So you're continually taking that into play. Now, for those of you more sophisticated who have been doing this now for some years, you really need to be thinking about this, especially if you've got yourself involved with lots of things on them 14 different industries that are creating a difference, and you need to start to map your numbers. The N of pioneer is numbers, numeration. Is that something that you tighten up with and feel, I'm not sure how to do that. I don't know how to work numbers. I don't know how to calculate cash flow forecasts. I don't know how to work spreadsheets. Is that you? Well, that's a skills gap. So seek the help I'm talking to you more sophisticated people now who've already got a lot of this to think about. Yeah, if you're just starting out, then you're just starting out. Start dollar cost averaging Bitcoin and start thinking of high yield projects. But if you're more sophisticated than that, you've got altcoins coming at you, you've got yield coming from USDT smart contracts, you've got Bitcoin price growth, you've got all these things going on, and you're trying to map out 2025 in your head, then think about the cash flow planners. Think about accessing the systems subscription, and we'll help you. We'll give you the templates on which you can start to push forward with that. There's workshops every Monday at 2 p.m. UTC specifically on that topic, by the way. So this is a very, very busy slide, but hopefully that makes sense. Now, let's look at some of the big macro updates going on as of week commencing the 17th of February 2025. Now, everything I've said on prior videos, just go back onto the playlists in the YouTube channel, or go back onto the go down on the systems hub where we put all the recordings of things like this, and just review those calls specifically at this section, because everything I've said for the past few weeks still stands. But all we're doing is building and building and building and building on that. And one of the big things that's been happening this past week in the Bitcoin side of the big opening through the Rockies towards the horizon of the Pacific is the companies, the banks, the sovereign wealth funds, and the states have put in significant amounts of ownership of direct Bitcoin, ETF Bitcoin, and even indirect ownership of Bitcoin through companies like Strategy. And you're talking about billions of dollars. Now, something Robin was discussing last week on Hot on the Block, and something we were discussing actually last week that's worth relevance and worth mentioning this week on this particular strategy call, is the fact that a lot of that purchasing of Bitcoin in particular has been coming off what we call OTC, over the counter. So these are big pools of resources, Bitcoin, that exists way outside the retail market. So you won't see this on, Coinbase or Kraken or Binance public exchanges. These are big pools of Bitcoin that exist, and these huge purchases exist in that. The interesting thing is, when you track that, which is easy to do because everything's transparent on blockchain, in particular Bitcoin, then you're able to see just how much is left or not of that particular pool of Bitcoin purchasing. Now, if that is drying up because of these huge steps, I've been speaking about this for weeks and weeks, what do you think is going to happen next with regards to where these larger purchases are going to have to go? Now, that's something we've never had before. Okay, for most of the past decade, it's been retail. It's been small amounts of people, and relatively speaking, and the people who tend to get involved have bought up on higher prices because they get all excited. That's classic retail, and then they'll dump as soon as there's anything. It's called having diamond hands, weak hands and diamond hands, and that's why you get this short-term volatility going on with Bitcoin. That's okay. Once you understand that, you just take advantage of it. We look at Bitcoin going all the way back to 2016 on this chart. This is what you're looking at. Big, it tends to echo halvings. So you get big activity, big purchase, $17,000 Bitcoin, $55,000, $60,000 Bitcoin, $70,000 Bitcoin, then long periods. All this period here up until 2024 was when it was all retail. There was nothing really going on because even though it was fantastic, if you understood how to work the asset, but accumulation, then bang, go again. Now this spike, just about the very end of this whole thing, is this on the left happening. And for that matter, you've got the same thing going on with gold. Yeah, just less obvious, okay? Depends where you zoom in and zoom out from. But the bottom line is, for this week's strategy overview, it's keeping an eye on the OTC markets. Keep an eye on the OTC markets. What does that mean to us, little old us, in our little way of just accumulating Bitcoin? We just carry on as we are. We just dollar cost average. You don't need to be clever with it. You just let the market come to you. Again, you can see that happening with Robinhood. 6 times more crypto trading fees created for that one platform compared to normal TradFi brokerage. Okay, just in the past few weeks. That's a lot of retail in there. The retailer obviously chasing the money because they're seeing this $100,000 Bitcoin, which is all being fed by these big guys. Yeah, a lot of that will shake out, no question, it always does. Your job is to hold. Your job is to realize that you never sell assets, you reallocate assets, and you collateralize assets. If you don't know how to do those two things, that's what the academy is for. So then you're going to ask what's going on behind the scenes. Then it gets to big topics that we could spend a whole session on. But you're looking at things like the 1776 model. Yeah, if you don't know how the US originally set itself up, if you want to call it that, then study the 1776 model. And then look at what happened between 1776 and 1913 and have a look at the differences that were going on with the dollar eagle and all these types of things. It's a big question. Unlikely. Are the US going back to the 1776 model? Well, the way they're moving, it looks like that's something they've got in their line of sight. Now, can they go all the way back to that? Is debatable. But it starts with full transparency. A big part of the reason that huge numbers of pioneers, again, went across to the US over the past 400 years is because of religious persecution, royalist persecution, lack of freedom of speech, the inability to live the way you want to live. And it was much more aggressive back then than it is today. But it's the same ethos. So if another part of the world creates an opportunity that people see as a better way of life, and in this modern age, that's being manifest as freedom of speech and transparency and the ability for people to have a shared distribution of wealth. That's basically what's happening in the States right now. And then you overlay onto that, for the first time since 1974, the likely audit of Fort Knox. Think about that. All this secrecy and all these things that have, in our lifetimes, we've been born into this. Most of us were born into, or just before, or certainly into the fiat system. We've only ever known the fiat system. Billions of people across the planet have only ever known the fiat system. That's enabled these swamps to develop. And part of that has been people not knowing how much is in the biggest, supposedly biggest gold reserve in the whole world. Unless it's London or Fort Knox, it's one of those two. But to get that audited, now that they're going through everything else, and they're finding waste everywhere, the US population are realizing, well, hang on a minute, we were putting a huge amount into this way this society works and not getting anything back for it. There's more homeless people, there's more destitution, there's more despondency, certainly since the 80s. Why are we putting so much into this and other countries in their eyes and not getting anything back when we don't know how much gold's in Fort Knox and we don't know where our money's actually being spent? In fact, it's so bad. There's even allegations that the very people at the very top who organise where distribution of wealth should be are in the honeypots. How are $200,000 paid politicians managing to become multi-billionaires? How's that happen? How's that work? Well, I guess we're going to find out, aren't we? Now, that'll push across the world, especially Europe. And it's those things that create this dynamic that allow us to understand where that redistribution of wealth is going to operate from. And it's very, very highly likely now that they're going to start to redistribute a lot of the transparency and visibility on blockchain. There's even talk of them converting, I'm talking them being the States, and if the States do it, other countries will do it as well, converting the gold they've got, or large proportions of it, across to Bitcoin itself, even if it's just 20%. And then putting that on what are called sovereign wealth funds. So that sovereign wealth fund, which creates the dynamic we've been talking about for the past 20 minutes, on top of tariffs, reciprocal tariffs is bound to be something that other countries explore, because what that does is give the ability for income to come into the country and equity to be created, put that equity back to work in the ways that we're doing already in our own households, get the cash flows moving, distribute that to your people so they can pay less tax, but the country still gets what it needs in public services and public good. Now, what's wrong with that? I guess we'll find out. Could it be any worse than what we've got now? Or could it be that we're front-running this whole thing simply by the ownership of Bitcoin itself? For those of us individually doing that, we're, it's the richest man in Babylon. We're looked after. Good for us. But it's not about just being the richest man in Babylon. It's about you being able to give to others and help other people in your village, town, city, country. So there's two very, very different animals going on. To finish the whole point on a very high level, you've then got to question where stable coins come into this. Because what's ultimately happening from what I've just described is the China effect. So the China model is supposedly about the redistribution of wealth. Right? Is that working? Arguably. Do the people working inside that model in China think it's working? I guess we'll find out. The stablecoin side is when you think about, okay, well, if the China model does what it does to redistribute wealth in that particular model, and then we're looking at exactly the same premise whereby sovereign wealth funds are taking ownership and then having the, let's say, transparency to redistribute that, even if it's indirectly to the people, then what does it mean for that to happen then on rails of exchange? Well, for the past 50 years, more than 55 years, the rails of exchange have been fiat currency. But they've been abused and corrupted, and all sorts of things have taken place, which means that now Gen Zs have got less life opportunity than their baby boomer grandparents. For that to switch, people have to do what I've been talking about for the past 20 minutes, individually on their own, and taking responsibility to push themselves in front and get on the front foot. That's easy now, never been easier. But ultimately, when it comes to a sovereign wealth fund or redistribution of wealth, then going back into the economy to create velocity of money, what rail is that going to be on? Well, it's probable that that's going to start to happen in either USDT or USDC, more likely USDC. Does that matter to us? Not really. Not really. Because, as I said at the top, the underlying asset equity and the underlying ability to cash flow that asset creates the rail anyway. We are already pushing out purchasing power into USDC and USDT, 80-20 principle. We've been doing that for a long time. So we're already well ahead of this, and we've proven it works. The message to this week's strategy call is watch this now transpire, probably starting in the US, where people get access to that redistribution of wealth through stable coins on the blockchain as the purchasing rail, no longer fiat. They'll still call it dollars, they'll still call it money, they'll still call it currency, but it's going to transition. Your job is to be ahead of that transition by being a private owner of the very asset that's going to make that possible. So whatever happens here, we just carry on individually, building our sovereignty and owning the basis of the money. That's our job. That's our balance sheet. Your job is to accelerate that process by reallocating part of that balance sheet to cash flow. Okay? So in the end, it's all about asset growth, the creation of velocity of money, the distribution, which gives society its purchasing power. It's not difficult, this. It's not difficult, but as we've said for years and years and years, you need to build it in your own household first. And just this last few months, we've seen a huge gap open up in the Rockies, which has given us a straight eye on the Pacific. And we've been walking across that prairie for years. And lots of people have fallen off. But those of us who understand and have seen now the reason that gap has opened up in that pass are on the front foot. And that's what front running is all about in this life. So to remind you, to finish off this section of this call, it's all about where you are. It's all about understanding how to eat the elephant. All these big topics of strategy I've been talking about are well and good, and hopefully they've resonated and give you something to think about, and giving you the ability to look in the mirror about where you're at realistically, and therefore what help you need to put these steps into play, whether it be the simplicity of just formulating your own DMO. If you don't know what DMO is, speak to the coaches. The simplicity of that, which is discipline, all the way through to the sophistication of asset reallocation and growth and timing and persistence and picking the right projects at the right time, especially if you're going to be working with altcoins. That's what the income subscribers do. So think about where you're at and then build yourself up into wealth as you go. Once you're in wealth, you're fine. Income's hard to create, even though getting a lot easier. Wealth has different challenges. Think about taxation. Think about keeping hold of your income. That's what wealth's all about. Okay, so if you're interested in that, click the link below and we'll look forward to seeing you in the academy.
Yours, by the way.
Oh, thank you.
Yeah, I borrowed it in my bag.